If you're new to trading stocks, you've probably found yourself wondering, what does the bid and ask mean? And why is there a difference in these stock prices? In today's video, I'm going to explain what bid and ask is in the stock market in a way that's easy to understand for beginners. Many new investors get tripped up by bid and ask prices or even ignore them completely and end up making costly mistakes. By learning what I'm about to share, you'll be better equipped to navigate the stock market and make smarter trades. So, in today's video, I'll give you a simple explanation of bid and ask in stocks. We'll talk about some important concepts like size and spread, and then I'll explain how to use bid-ask when you're buying and selling stock. So bid-ask is a beautiful concept because it's all about liquidity. You know, there's many different ways to invest and many different ways to build an asset column, but there's something unique about the stock market that is stronger and better than any other asset class, and that's liquidity. What do I mean by that? Well, if I'm going to go to the real estate market, we're going to negotiate. We're going to haggle. I'm going to say, oh, this is my price and this is your price. If we go into business, we're certainly going to haggle, and we're going to go to market and haggle over prices, and I'm going to haggle with everybody, my suppliers, my distributors. It's a negotiation world. One of the nice things about the stock market is for people that don't like to develop negotiation skills or develop sales skills, there is so much liquidity built in. In other words, there's a whole group of buyers ready to buy, and there's a whole group of sellers ready to sell. Well, these guys don't always see eye to eye. The market maker sits there and it's done electronically, but they say, hey, here's all the people that want to buy stock, and here's all the people that want to sell the stock. And we find those that meet in the middle, and boom. So the nice thing about a bid-ask price is it really represents what we call liquidity, the fact that there's a lot of people bidding and a lot of people asking. And so the bid-ask price tells us who the buyers are and who the sellers are. If I'm selling a stock, I'm going to tell you what I'm asking for that price. It's just like eBay. Hey, I'm asking, $35 for this item. Well, a bid is what people are willing to pay. So ask is what people are asking to take for their price, and the bidders are what they're willing to offer in terms of price. And sometimes they match right on and we do a deal, but generally there's a very small spread. Now, let's talk about this spread. If you find a stock that's highly liquid, that spread could be a penny. We could literally see a stock for, $300.79 and $300.78, and it could be a 1 penny spread, which isn't that much. And that's what a spread is. The spread is the difference between what people are asking and what people are bidding. I'm asking a certain amount of money for my car. So people are offering a certain amount of money for my car. Whatever we have in the business world, there's buyers and there's sellers, there's bidders and there's askers. Well, if we're far apart in the negotiation, that spread is going to be wider. And that is a signal that that stock or option is less liquid, that there's not as many people. The size, right? The amount of people that are trading are fewer. Well, if you're a trader, you probably like the idea of having high liquidity bid-ask spreads that are very, very narrow and very, very small. Now, here's a really important thing. I almost never go with bid or ask. I find something in the middle, and we call this shaving the spread. Now, this is one of the things I taught my sons when in the 8th, 9th grade, whenever it was, we started trading. As I said, 100% of the time, you split the difference, right? You shave that spread. So if there's a 10-cent spread, I'm going to go right in the middle and go down 5 cents or up 5 cents because I don't want to pay what they're asking. I'm certainly not going to accept what they're bidding. So think of it in the same way you would any regular negotiation. You can simply put it in order that shaves that spread. If it's wide, make sure you always get the best price when you're buying or when you're selling. So it's usually a little tip on how to tell bid and ask. It's always the one you don't want, right? If you're selling, you certainly would like to get more. And if you're buying, you'd certainly like to pay less. And so you want to shave that spread. And also just another reminder that if that spread is wide, that's a tougher stock because there's less liquidity. That means there's less people that are interested in participating in that particular stock that day. What's the best way to learn about bid-ask spreads? Get your paper trade account for sure. Open up that paper trade account. Practice, practice, practice. Practice being the buyer, practice being the seller, and most importantly, practice shaving that spread. If it's a 5, 10, 15 cent spread, be cautious because that's not very liquid, but always shave that spread in the middle. Now look, there's a bunch of confusing terminology like this in the stock market, but getting started doesn't have to be hard. I have a complete beginner's guide to investing in the stock market here with everything you need to know. And if you found this video helpful, don't forget to like the video, subscribe to the channel, and hit the bell notification so you don't miss the next one.